Hello and welcome to InvestorToday.ca. I'm your host, Dave Glover. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR professionals. We're coming to you live from the World Resource Investment Conference. It's Monday, June 4th, and I'm standing here with Mickey Fulp, the mercenary geologist. Mickey, always a pleasure to get an opportunity to speak with you. Now, one of the things that has come up, and you and I have been doing a number of shows in the same sort of thing lately, but one of the things that's been coming out, and I heard this in New York as well, is how do American investors get into the Canadian exploration markets?
It can be a little difficult. There's a couple of ways to do it. You can trade through discount brokers coming out of the United States, but we'll get into this a little later. There's some difficulty in that realm. Or you can get a Vancouver or a Toronto-based broker, a brokerage house up here, which is the way I choose to do it. So I pay a full commission brokerage fee for all my trades. To do that, you have to be a qualified investor. So I think the criteria is you've got to have net assets of $1 million or more. Now, some retail investors won't make that criteria, so then they would also have to trade through a discount broker in the States. The Toronto Venture and Toronto Stock Exchange listed companies generally also trade in the States via the pink sheets. The problem with that is you have a market maker on each end, and so you're paying, and you end up with bid asks that are not as tight as what what you would have access to if you were trading in Canada. So my preference, even though I'm paying a full-fledged brokerage fee of $100 a trade versus a discount broker at perhaps even $10 a trade, is I have a broker understands this market. He is able to buy and sell and save me a penny here or a penny there. And when you're trading a number of large shares, because these are often penny stocks, that adds up really fast. So I feel like using a Canadian broker gives me an advantage. I get a better bid ask. I have a trader who understands the market, and I'm not at the mercy of a low liquidity volume trade in the U.S. that has usually a higher spread on the bid ask, with a market maker being paid on both ends of that.
Well, as you know, I do a lot of investor relations for a number of small cap companies, and I would have to say 2/3 of the calls I get on a weekly basis are from Americans. I have a gentleman who phones me from San Diego on a regular basis, and one of the things he said was that he was able to get into this market by going through TD Ameritrade, which is, is a Canadian bank which is operating in the United States. Is that a route you think that is accessible for a lot of other investors?
Well, I certainly would think it would be, and I don't know that particular brokerage house, but I imagine that's a discount broker. So if that's the case, then you're not going to have the advice and the access to a broker who's going to give you some insights out of best trade and get the best deal for your money. And that's the reason that I tend not to do that. But that certainly is a legitimate way to do it, and a lot of Americans do that. It's generally not that hard to trade these stocks. Of course, if you're a Canadian citizen living up here, I think you have somewhat of an advantage. I tend, by dealing with a Canadian broker with a U.S. subsidiary, I feel like I get the best advantage I can get in trading.
So what do you think the big draw is then for American investors to get into the Canadian markets? Do they just see, is it just a boom country up here for them from their perspective?
Well, I think to use an old Doug Casey joke that Canada is America light. So the thing is, the U.S. natural resource markets are traded on the bulletin board, and there's lots of problems with some of those companies. It's much easier, because of lack of technical oversight, for people to run deals that are not quite on the up and up, and in some cases outright scams. So I won't touch companies that don't have a Toronto Venture or a Toronto Stock Exchange listing. These are very high risk, high reward stocks. They're speculations. It's a bit gambling, but if you do your own due diligence and perhaps use some of the tricks of the trade that I've written about, you can learn how to do your own research and pick fundamentally strong stocks. You want to try to buy those when they're undervalued and unloved and unwanted, and sell them once the market knows who they are. So I adopt a contrarian philosophy in all my trading.
Well, with the markets the way they are, it seems as though everything's at fire sale prices right now. So, as I always like to do when I'm talking to Mickey, I always want to pick your ear and get an idea on what you think are the hot areas to play right now, and what companies, if any, you're looking at yourself.
Well, the hot area, I think, still is graphite, and we talked about that previously. I'm involved with one company, a sponsor of my website. I'm a fairly large shareholder. That's Flinders Resources. Another company that might be worth looking at right now would be Mawson Resources. Again, a sponsor, and I'm a significant shareholder with an advanced gold uranium play in Finland, in northern Finland, and I've been there. It's bonanza grades. They're just starting to come out with drill results right now.
Well, a couple of the companies I work with are up in the Yukon, and we already know that a lot of juniors don't have any money right now to proceed with exploration. Do you think the Yukon is still an exciting area for investors to be getting into?
Well, I certainly think the Yukon, there will be a couple of gold mines come out of the Yukon. Now, it's likely to be a decade before that happens. There are lots of significant gold occurrences, and in fact, I'm involved with an explorer in the Yukon. That's Tarsus Resources, which is a prospect generator. Again, a sponsor of my website and own significant shareholdings, but they, like the entire market, have been beaten up a bit, but probably less than some. But they've got some interesting prospects in the Yukon. Then they've also got a new Carlin-style discovery in Mexico that's garnering some interest. So that might be an idea for speculators to take a look at Tarsus Resources at this stage.
Well, and the great thing about them, as you point out, they may be in the Yukon as well, but they're also in Mexico, so they've basically got year-round projects at this point.
And that's important because you can only work in the Yukon for 3 or 4 months of the year for the most part, and where they are in Mexico, that's a year-round project. Now, you'll probably shut down during the summer monsoon season, which is going to come here in about a month or so, but, essentially in Mexico, you have a 9-month field season versus up north here, where a very short field season, and the best time to work in Mexico is North American winters. So that a Mexican project combined with Yukon projects fits very well together, I think.
Well, you're talking about a 12-month project at that point, whether they be in Mexico or in Canada at that point. Right. So big area play still graphite. Rare earths, have they sort of moved off? Is that something that people aren't really looking at anymore right now?
No, the valuations have gone down considerably. I think what we saw with rare earths is the bubble started to leak about a year ago, and now we're down to the real legitimate companies, a few contenders. Luckily, we picked a couple of those contenders very early on and had phenomenal profits. But those companies, the one I'm still is still a sponsor of my website would be Quest Rare Minerals, coming out soon with a pre-feasibility study. So what we have done is we've taken the 200 rare earth companies and we reduced those down to probably 10 that still have a chance of being successful in this space.
Well, one of the things I've heard recently, as recently as Friday, was that there's approximately 1,600 junior venture companies on the TSX right now, and with the markets being the way they are, we're going to see a lot of merging. We're going to see a lot of those companies, unfortunately, cease to exist. What do you think? We're going to end up with maybe 700-800 companies left on the junior market?
I would kind of welcome that, to tell you the truth, because during the boom times, there were a lot of companies funded. There was dollars being thrown everywhere, and some of that money has been spent quite foolishly. So I'd like to see the number of companies in this business considerably shrunk, and where we can kind of start all over again and see if we can't build a better mousetrap this time.
Exactly. Well, as always, I'd like to give Mickey the last word when we talk. So, Mickey, one last pitch, if you will.
Well, I don't think the bottom is in yet, but it will happen sometime this summer. I personally hope and expect a better market after Labor Day. So at some point there will be fundamentally strong stocks that are going to bottom, and those are the ones you want to target and be ready to go. You're not going to be able to pick the bottom, but decide at what at what share price you want to own them, put in a bid now, sit back and wait and see if it gets filled.
And eventually it'll come down to your price, hopefully.
Well, maybe it will, maybe it won't. If it doesn't, then the risk-reward profile was never met in your regard, so you just say move on and find the next one. So there's not a stock out there that we have to own. And investors should always remember that. You may want to own it. You don't have to own it, okay?
Right. Well, I'm Dave Glover. This is InvestorToday.ca. I've had the great pleasure of speaking with Mickey Fulp, who is the mercenary geologist. You can check out his website. The website again, Mickey?
mercenarygeologist.com.
There you go. Check that out. There's a lot of great leads in there as well. And for those of you that are investing in the junior market, I wish you great luck this season. And we'll see you next time.